It's Monday, 16th of February, 2026. Welcome back to your news update on Blip Brief. Crisp, but almost everything updated every weekday.
Let's get straight to the numbers that are defining the morning.
And honestly, if you haven't looked at your portfolio yet today, maybe don't. Grab a coffee first. Because if you are seeing red, you are definitely not alone.
It's a sea of red out there.
The Nifty IT Index hasn't just slipped. It has taken a massive hit, sinking by 12%. That is a brutal way to start the week.
It is, and 12% in a major index is not a stumble. That is a correction. But before we panic, we have to look at the why.
So this isn't just a local issue.
Not at all. This isn't just an Indian tech problem. We are seeing a global synchronization here. The primary driver is a broader downtrend and immense global pressure on tech valuations.
But we've seen volatility before. This feels heavier. Is this just a bad quarter for a couple of giants, or is this structural?
It feels structural because the narrative has completely shifted. For the last 2 years, the market mantra was buy everything AI.
Right. If a company even mentioned the word generative, you bought it.
Exactly. Now, big institutions are reshuffling. They are moving away from those inflated valuations. The sentiment has shifted so rapidly to show me the immediate returns.
So the AI hype is finally meeting reality.
It's meeting the reality of AI implementation costs, and that is compressing valuations hard. A 12% drop is the market repricing the entire sector's growth trajectory. Patience has evaporated.
Speaking of restructuring, let's look at a giant that usually screams stability Hindustan Unilever. The headline number this morning is shocking. Net profit from continuing operations has declined by 30%.
It sounds catastrophic. For a company that sells soap and tea things people buy no matter what, that number's alarming if you only read the headline.
But it's not the whole story.
No, this is a perfect example of why you have to read the footnotes. This 30% decline isn't because people stopped washing. This is, well, it's largely engineered. It's the result of the demerger of its ice cream business.
Quality Walls, which is actually listing separately today, right?
Yeah. It is. And think about the business model. Selling soap is steady. Selling ice cream, you need cold chains, deep freezers. It's highly seasonal and capital intensive.
So HUL is essentially saying, we don't want the headache of the freezer logistics anymore.
In a way, yes. It represents a portfolio transformation. HUL is shedding a complex seasonal business to focus on its core FMCG stability.
So the profit book looks lighter by 30% today because a huge chunk of the business just walked out the door.
Precisely. It's a classic case of shrinking to sharpen focus.
It's interesting, HUL is shedding heavy assets to stay lean. But if we look at the energy sector, it's the exact opposite story. Inox Wind has posted a profit growth of 14%.
That's the contrast of the day, isn't it? That 14% growth for Inox is the downstream effect of a much larger macro trend. You have to look at capacity.
What are those numbers there?
Solar capacity installation alone has surged by 43% year on year.
43%. That is a massive jump in physical infrastructure.
Yeah.
That's not just paperwork. That's panels on the ground.
It is immense, and it connects directly to the country's aggressive shift toward green power. Government policy support is acting as a tailwind pun intended for companies like Inox.
So the green transition is moving from policy papers to actual profit and loss statements.
Finally, yes.
So energy companies are making money, but let's talk about where consumers are losing it, specifically in healthcare. This next figure is just, it's going to hurt. We are seeing profit markups on medical supplies, specifically syringes, at Max Hospital, hitting up to 525%.
This is the dark side of the medical business model, and it really raises a question about regulation. You see, the government has capped prices on many procedures, on stents.
So they've limited the profit a hospital can make from the surgery itself.
Exactly. So the balloon's being squeezed at one end, the surgery cost, and it's just expanding at the other.
The other being consumables.
Consumables.
Yeah.
The lack of regulation on things like gloves, syringes, gauze, it allows hospitals to shift their profit centers. If they can't make the margin on the doctor's time, they're making it on the syringe.
But 525%, that's not a margin.
It feels like a ransom. It's the result of a regulatory gap. Until that's addressed, this will continue.
A tough pill to swallow. Let's zoom out to the macro picture. We started with IT taking a hit, but here's a contradiction. India's trade in AI-enabling goods has actually risen by 13.5%. How does that work?
It seems contradictory until you split IT into two buckets, software and hardware. The IT stocks getting beaten are largely services companies, people writing code.
But the trade data is different.
The trade data, that 13.5% rise, is in the physical goods, the hardware and inputs that enable AI. We are talking about components, cooling systems, assembly.
So we're moving up the supply chain.
Precisely. It signals a shift. We're moving from just writing the code to exporting the inputs required to run the code. It's a pivot from soft skills to hard assets in our export data.
We're selling the shovels during the AI gold rush.
The classic and very smart strategy.
Meanwhile, on the domestic front, if you're waiting for a check from the government, you might be waiting a bit longer. Income tax refunds have fallen by 19%.
This isn't a liquidity crisis for the government. It's a scrutiny protocol. The Income Tax Department has implemented significantly stricter verification norms.
Using their own AI, I assume.
Of course, they are flagging mismatches to curb fraudulent claims, which means the whole process slows down. That 19% drop represents the files currently stuck in the to-be-verified pile.
An efficiency drive that feels like a delay.
For the consumer waiting for that money, it's definitely a pinch.
So let's talk about where the money's going. Housing prices in Delhi NCR surged by 49% over the last year. Nearly a 50% jump.
A staggering appreciation. This is the classic collision of supply constraints meeting a post-pandemic demand boom. But there's a psychological layer here, too.
The flight to safety.
Yes. Think back to the start of our conversation, that 12% drop in IT stocks. With that kind of volatility in equities, investors are looking for tangible growth.
You can't live inside a stock certificate.
But you can live in a house. Real estate is reclaiming its status as a primary asset class. That 49% surge tells us capital is fleeing volatility for concrete.
Speaking of volatile portfolios, we have a cautionary tale for the retail investor. We all love to follow the whales, the ace investors. But the famous superstar portfolios are bleeding. Dolly Khanna's portfolio has tanked by 42%.
This is where it gets really interesting for the average investor. A 42% drop is massive. It highlights the risk of what we call copycat investing.
Because these portfolios are often heavy in small caps.
Exactly. And small caps have been hammered. You have to understand beta. These stocks move faster and harder than the market. When the market goes up, they soar. But when the tide turns,
They don't just dip, they crash.
they crash. This 42% drawdown is a reminder that you can't just poppy the trade if you can't stomach the volatility.
However, for those looking to invest from the outside, the government is trying to make things easier. There's talk of a de minimis threshold review for foreign investments. Can you break down that jargon for us?
Sure, de minimis is Latin for about minimal things. Right now, foreign investment, especially from neighbors like China, faces intense red tape under Press Note 3.
A huge bottleneck for startups.
A massive one. So this review is a bureaucratic unlock. The government is considering allowing automatic approvals for small percentage stakes. Say if a foreign entity wants to buy just 1 or 2%.
A fast lane for small, non-threatening deals.
Exactly. The logic is that a minor stake doesn't threaten national security, but blocking it chokes liquidity for startups. This could be a game changer for them.
Let's move to the global stage. An update on the U.S.-India trade framework. Tariffs in the interim framework have been reduced to 18%.
This is a strategic sweetener. Reducing tariffs to 18% is designed to boost mutual confidence and streamline supply chains between Washington and New Delhi.
But there's still that elephant in the room.
The Russian oil, yes, that's still a friction point. But this tariff reduction is a signal. It says that despite those issues, the commercial logic of the partnership is strong enough to lower trade barriers. Pragmatism over purity.
Let's talk about safe havens. Usually in chaos, people buy gold. But gold prices have dipped. Silver, though, had previously rallied 28% from its lows. Why?
The gold dip is a currency and interest rate play. We've seen a firmer U.S. dollar and softer than expected U.S. inflation data.
Why does soft inflation hurt gold?
Because it alters expectations for the Federal Reserve. If inflation is soft, the urgency to cut rates changes, the dollar strengthens, and gold being priced in dollars gets cheaper.
And silver's rally.
Silver is an industrial metal. Remember that 43% surge in solar capacity. Solar panels need silver. So silver's rally was an industrial demand story, while gold is suffering a macro finance story.
Looking at our neighborhood, Bangladesh has its election results. The BNP is forming the government, but with an interesting detail, minority candidates have secured seats.
This is a very nuanced situation. The BNP's victory was expected, but the presence of minority candidates signals a complex and perhaps more inclusive political landscape.
And why does that matter for India?
Stability. Bangladesh is a huge trade partner. A government that appears even slightly inclusive is more likely to be stable. It's a signal they want to govern, not just rule. And India needs a calm eastern border.
Unfortunately, calm isn't the key word elsewhere. Reports of a drone strike on a Russian Black Sea port and ceasefire violations in Gaza. Things seem to be escalating.
They are, but you have to look at the timing. These are leverage tactics. Both events are happening just ahead of potential fresh talks.
So it's the fight before the talk strategy.
Precisely. In conflict zones, you often see a spike in aggression right before negotiation. It's about establishing a stronger bargaining position. You want to walk into the room looking strong.
All right, let's pivot from the conflicts of today to the technology of tomorrow. We promise one big innovation, and it's called neuromorphic computing. Sounds like science fiction.
It does, but it's actually biology meeting silicon. For decades, supercomputers have been getting faster, but they are energy-hungry beasts. They consume megawatts of power.
And these new computers are modeled after the human brain.
That is the breakthrough. These neuromorphic chips mimic how our brain neurons fire. Your brain is incredibly efficient. It only uses energy when a neuron actually fires to process data.
So instead of a machine that's always on, these chips just pulse.
Exactly. They are event-driven. And the why this matters is about scale and sustainability. It allows for massive calculations, like weather modeling, with a fraction of the power.
Which brings us full circle, back to energy.
It all connects. If we want AI everywhere, we can't burn down the planet to power the servers. Neuromorphic computing might be the solution, a brain-like computer that could help save our energy grids.
A hopeful note to end on. And just before you go, a quick note. This Deep Dives commentary was put together using advanced AI. We always strive for accuracy, but please do cross-verify any crucial information yourself. Your informed decisions are what matter most.